The second quarter earnings of NIO were better than expected. So given that the stock is down about 17% for the year to date, is it a buying opportunity at these levels? I thought we'd come back and do an update on NIO, considering they've just had earnings announcements in August, and this was slightly better than expected. It's been something of a roller coaster ride for the stock over the last 12 months. A year ago, it was trading below 20, touched 66 plus in January, and here we are at $40 a share. So I thought, let's do an update. Let's see if these earnings will perhaps make investors look at NIO in a different way. And the fact it's been knocked back to where we are now, is it a buying opportunity? So as usual in this video, I'll talk a bit about the recent news, those earnings, what the challenges are. Then we'll come back and take a look at the technicals in a bit more detail. Hello, I'm David Jones from Capital.com, and I thought this time round on the stocks channel, we'd revisit NIO, the Chinese electric vehicle manufacturer. They had earnings that came out in August. So I thought, let's do an update, catch up with the recent news, then jump on the charts and take a look and see what the technicals say. As usual, if you're watching this and you haven't subscribed, if you could click on subscribe, it does help support the channel. It's a new channel for us, and it means we can continue to push out lots of different content throughout the week on the various stocks that we look at. Right, let's get into it and take a look at NIO in a bit more detail. So as I said, it's a Chinese multinational electric vehicle company, car company, that was founded back in 2014. The company came to the market via IPO in September 2018, so it's been, 4 years now. It started off trading at $6 per share, and by January of this year, the share price had traded up to $66. So an incredible performance, although it has been a lot weaker since then. So how this is different to other electric vehicle companies is in terms of infrastructure. So NIO has built a network of battery swapping stations in China. So you're driving an electric car, the charge is getting a bit low, you can pop into a battery swapping station and your battery is swapped out for one that's fully charged. And many people think that perhaps this will give them an edge over other competitors. The earnings in August, I think, were better than expected. The company still made a loss for the second quarter, but this loss was narrower than the market was forecasting. So that was good news. And in terms of revenue, this was up 127% on the same period from 2020. But there are still concerns for the car industry as a whole, of course. We still have this global chip shortage in place that's affecting, I think, all the car manufacturers. So the inability to get the microchips into the cars clearly can be affecting production. Plus, when it comes to NIO, I think there have been concerns about the spread of the Delta variant of coronavirus in China. And it is something that has unnerved markets over the last couple of months, although there is a feeling that perhaps the Chinese government do have it under control. So the share price traded up to $66 in January of this year, but it's been pretty much downhill all the time since then. So for the year to date, the NIO share price is down 17%. So what does this mean? Is this a buying opportunity or have we seen the best already for NIO and the risk is the price is going to slide further? We'll take a look at the charts and the technicals in a second, but first of all, let me talk about the big levels to watch. So I think on the upside, we've got highs left from early August coming in around $46.40. On the downside, there is a lot of support running from $30 to about $35.60. So it could be interesting, I think, if we think that perhaps the worst of the slide is out of the way. But as usual, to put some color on these numbers, let's take a look at the charts. Let's kick things off with our 20-day moving average. So again, just as a reminder, moving averages work well in trending markets. So we had a buy signal back here almost a year ago now, September 2020, as the price moved above the moving average. Then if the price falls through the moving average, like here in Feb of this year, that's a sell signal. Another buy signal here in May. And then it does get a bit scrappy when the price is perhaps loses volatility, goes a bit sideways. We can have some scrappier signals from the moving average. The latest signal we have over the last 24 hours or so is a buy signal with the price on the 2nd of September moving through $40, crossing above that moving average. Again, does this end up being a more valid signal than some of the ones over recent months? Let's wait and see. But I think that does demonstrate perhaps some of the strength we're seeing at the moment. Take a look at the RSI down here, 10-day RSI. So the RSI did go oversold mid-August when we saw the price bumping down towards $36. The last time it was oversold was briefly oversold in July, which did end up being a short-term low. And again, this major low back in May. So it's interesting that the RSI has not done a bad job in recent months in calling the turn. Let's see how it performs this time around. At the moment, the RSI is about 50% or so we're not getting too much from it in the short term. Let's take a look at the price action. I think specifically, perhaps, what's happened since those highs up above $66. So the price sold off. Then we've seen it, I think, build a base from March. The March lows at 31.76, briefly dipped below it in May by about $1, but we saw a really strong recovery off that. But since then, that recovery's run out of steam as well. So I think we do have some fairly mixed pictures at the moment. I think if we were looking at the trend since the July highs, let's flip this over to an hourly. We could argue that trend is still just about down. It's close to cracking it. If we saw a move through about $41, it could well signal the end of that trend. So I think it does make it an interesting watch down here. Let's take it back to the dailies. And I suppose from a trading point of view, if you did think, or if someone did think that trend was going to end, it's quite interesting in terms of risk, because we could have one idea for a stop loss would be the other side of those late August lows before the earnings, coming in at $35.60. So if we saw a change in sentiment by investors following those earnings, we wouldn't expect that late August low to be taken out. So I think that's quite a good reference point in the short term. I think, if you look at the last, 6 months now, it is broadly sideways with some volatility. But I think it's interesting to see if $35 holds for the stock, and perhaps we get a push back up to 45, 47.50. So we don't have a clear longer term trend like we do in some of the stocks at the moment, but some people may take the view that perhaps down here the stock price has been knocked far enough. For me, it's all about that $35 level. Assuming this is going to hold, perhaps it will end up being a springboard for further recovery. I think if we see $35 broken, the risk is for a slip back into this zone from March through to May below 32.5. But overall, interesting to see if it can break this downtrend, and an interesting stock to watch in the weeks ahead. That's it for this update in NIO. We'll come back to them in the months ahead, see if we do get a bounce ahead of these old 30, 35 levels, or if we see further weakness from here. But for now, from me, David Jones and Capital.com, we'll leave things there. Good luck with your investing. For more trading videos just like this, please subscribe to our channel.